Number one is inquiry. So after this, someone should remind me, maybe Caleb or Kingsley, can send me a personal message, remind me, because I need to send this recording and the recording for strategy as well, because we are dealing with past questions and how to handle past questions. So that I put it on the group. So number one, inquiry. Number two, confirmation.
This one there.
Please, can you choose where you want to be? If you want to be in the party or... Okay. So number one, inquiry. Number two, confirmation. Number three, inspection. Number four, observation. Number five, recalculation. Number six, reperformance. And number seven, analytical procedures. So these seven, please remember it. I beg you. You can't go into the audit exam without knowing it. We will get to it. But that is the beauty of past questions. We've come to meet it. So let's tackle it. Number one, inquiry. Number two, confirmation. Number three, inspection. Number four, observation. Five, recalculation. Six, reperformance. Seven, analytical procedures. Okay. Since we've gotten that, now it says, let's describe the audit procedures required in respect of accounting estimates. I know we haven't gotten here, but let's just say you're an auditor. What are some of the audit procedures you use to audit accounting estimates? I agree that we haven't done this, so the last two. Oh, the last two were reperformance and analytical procedures. Reperformance and analytical procedures. Analytical procedures. ANALYTICAL procedures. Then the second one is reperformance. So those were the last two. Can anyone give any audit procedures? I've mentioned some of the audit procedures for you. So in this case, can anyone give some audit, like what are some of the things procedures are some of the things you do? It's just English, brofukeke, that they've made it technical. What are some of the things you do when you are trying to audit accounting estimate? That's all. It doesn't have to be correct. Okay, if no one, someone wants to, yes.
So one, we could assess management's own assessment of their estimate. So whenever you are going for an audit, you need to understand what management do in certain accounts. So for example, cash and bank, what are the procedures that have been done, the internal procedure done by the client? So you get an understanding of what is actually being done. So one, you assess management's own evaluation of that particular procedure.
Fantastic. So this is more of, for the 7 audit procedures I gave you, this seems to relate more to maybe, I would say, inquiring from management how the accounting estimate is made. So that's what it relates to. That's why I said those 7 procedures, whether you do chew and pour, whatever, it has to be in your mind. Inquire of management of how the estimate is made. So that's the first audit procedure that comes to mind, right? Another audit procedure that comes to mind as well is when we are looking at the 7 audit procedures, one of the things we identified was one of the things we identified was you can say inspection or review. So that's also another thing to look out for. You need to review the judgments and decisions made by management in making the accounting estimates. You need to review it. You need to review how the method of measurement and whether even the assumptions, that's one of the things you need to check. And I was expecting someone to say that when it comes to the estimates, you need to check whether the assumptions in relation to those estimates are correct. So these 8 marks, it means that you actually have to mention 8 of them. You have to mention 8 of them. So we've mentioned 3 so far. So because we haven't treated it before, I'll try and give you all of them. Another procedure you also need to look out for when you are looking at accounting estimates is the operating effectiveness of the controls around these estimates. This particular point, you can use it for several situations. So you need to check the operating effectiveness of the controls. So that makes it how many? 4. That makes it how many? How many have I mentioned so far? I don't know how many I've mentioned so far, but the next one would be, you need to, and again, this also applies in several situations. You need to obtain what we call written representations, and the question B even highlights that. So you need to, and written representation, we've talked about the management representation. You need to obtain written representations from management, saying that they actually believe that these assumptions are legit and reasonable. You need to obtain written representations from them. That's also part of the audit procedure. So that makes it 5. Also, the disclosures that surround accounting estimates, right? You need to obtain sufficient, appropriate evidence about the disclosures around the accounting estimates. You need to obtain that as well. So in all this, right? What I need you to keep at the back of your mind is that what I need to keep you what's the word? What I need to you to keep at the back of your mind is the 7 audit procedures that I gave you, the 7 audit procedures that I gave you, it's important to understand. Even before I'm done with the 8, I'll come back to it. So that you see how not all of them will apply. Some of them will apply, and some of them will not apply. You know, another thing that the auditor too will do as part of the audit procedures, the auditor would have an expectation or a range, a range in their mind before they even evaluate the accounting estimate. So what is the range or the expectation of the possible estimates? The auditor needs to also define that or develop that. Before you can assess management estimates, you need to have in your mind what should the range be like or be looking like. I don't know if that's making sense. So when we go back to the 7 audit procedures, the general ones, we see inquiry. Okay, Angela. Hello, Angela, you've raised your hand though. Angela. Hey. Anyway, so when we go back to the 7 audit procedures we are talking about, we see inquiry, right? So we inquire from management. You also have to confirm whether the assumptions surrounding confirmation. You also have to confirm whether the assumptions surrounding the accounting estimates are actually reasonable. Inspection of review. You have to review sufficient and appropriate evidence surrounding the accounting estimates. Even there are cases where the auditor will recalculate some of these estimates. Okay, Caleb.
Yes, sir. So in answering this question, is it advisable to just give like general accounting estimates, or you can focus on one specific accounting estimate, let's say like depreciation?
Oh, I would say make it general. It didn't state a particular estimate, so you can say make it general. But if you pick an accounting estimate like depreciation, right? The audit procedure for it will be recalculation. So you recalculate the depreciation number that the client has already calculated. But once they haven't mentioned it, just make it general. So it could be depreciation, it could be a provision, I hope that makes sense.
Yes, sir. Thank you.
Yeah. So you see, those 7 audit procedures I gave you, you see how they play out in this. So even if you are short of points, right, you don't know what to write. If you remember these 7, and you know what exactly we are referring to, whether it's accounting estimates, you can easily write things around it. Easily. I hope that makes sense.
Yes,
I don't know
please.
why the
Yes,
time
please.
Yes, it does.
runs so fast. Anyway, for each of the 2 issues above, discuss the appropriateness of written representation as a form of audit evidence. So here they are talking about the appropriateness. So it's basically the importance of written representations, nothing or suitability of written representations. We've already done this. So can anyone take a shot at it?
Okay, so for the amount owed by insurer company, they can use confirmation. That is, first of all, they should confirm the existence of the firm, whether it's actually there, or it can be fake organization that they put their name there or something like that.
Mm-hmm.
Also confirm the actual amount being owed by insurance company by a confirmation from the organization, but not from the manager. So you can get a written confirmation from insurance company actually stating that yes, this is the amount they owe, or they pay this, or they don't really owe at all. Yes, sir. So this what is in my mind for now.
Okay, so always I don't know if that's what Caleb was trying to ask me, but always know that there was a case above the question, right? There was a case above the question. In A, they said in respect of accounting estimates, so they made it quite broad. But in B, one way they made it specific. They said for each of the two issues above. So discuss the appropriateness of written representation. So you take receivables, the receivable balance. How appropriate is written representation? You know, here it's appropriate because it helps you to verify, valuation, the value of the receivable balance. You are valuing the receivable balance. So it helps you in that regard. It helps you to verify valuation. That's one. The existence and rights and obligations with regards to receivable balance. There's another thing that is also important in audit that we haven't come across yet, but we'll be treating. We'll be treating later, so I don't want to mix that. So the written representation helps you to verify the valuation or even the existence of the receivable balance. Then when it comes to the warranty provision as well, what do you think written representation, what do you think is appropriate? Does anyone have an idea?
Yes, yes. So I think it's appropriate because the case, they said that the warrant provision is a material item. So providing a written representation about the assumption behind the provision and the completeness of that provision is going to be key to make a decision with regards to the audit.
Okay. That's does anyone have any alternative opinion? Okay, so yes, the written representation for warranty provision will be useful here, when we are looking at warranty claims. But what about receivables? What about receivables?
I think same to with receivables to confirm if indeed the receivable balance on the face of the financial is actually there. So we are looking at the existence aspect of it to make sure that indeed the amount they are claiming is actually the same thing, and we could confirm also from the data to make sure that that's the same amount being reported by the client.
Okay, so so you're saying it's also appropriate. Okay. Now let me bring a twist to it because we are having a discussion, right? Receivable, is it an asset or a liability?
An asset.
Okay, warranty, is it an asset or a liability?
It's a liability because it's a provision. I don't know. Are we talking about the aspect of the provision or the warranty itself?
No, the warranty provision, yeah.
Okay, then it's a liability.
Okay. And we all know what written representations are, right? So you need to, as an auditor, you need to check a few things, right? And look at management interests, right? So management interest would be to increase assets and lower liabilities. Management is all for making their financials looking good. That's how management wants, they want themselves to look good. So their interest would be to increase what? Assets, which is receivables, and decrease provisions. That's how they would want it to look. Okay, so in discussing the appropriateness of written representations, which is management representation, you need to know that because management has an interest in increasing receivable balance or increasing their asset balance overall, written representations might not necessarily be a good form of evidence. I don't know if I'm making sense. On the other hand, when you look at warranties, they would want to decrease their warranty provision, you know. They want to decrease their warranty provision. And so it is not as risky as receivables. So for your receivables, written representation might not necessarily be the best form of evidence. I don't know if it's clear. If it's not clear, let me go a step ahead. Another thing is that when you're reading the receivable balance owing from, when you're reading that passage, you realize that there seems to be other, it says during the year-end audits, your team reviewed the aging of this balance. There seems to be other ways of other audit procedures, you know. There seems to be other forms of evidence like the aging balance. That's one good form of evidence when we are looking at the receivable balance. And so written representations, you know, might not necessarily be the best when it comes to receivable balances. Does it make sense? Or it doesn't? If it doesn't, I can explain again.
Okay, so to get it right, so it means with receivables, we should rather go in for the confirmations from the client, that's the client of the audit client, rather than
Fantastic.
going in for the rating. Okay.
Fantastic. Okay. Because rather than going in for, because it's the client that is owing. It's the client that is owing. And there's no client, that they are the ones owing. So it will be better to go for them rather than go for what management is saying. So yeah, that's a nice way to explain it. That's a nice way to explain. Then let's move on to the next one. Describe the additional procedures the auditor should now perform in order to reach a conclusion on the balance to be included in the financial statement. Describe the additional procedures. Is this talking about, I think this is in relation to the, okay, it's in both of them. So since it's both of them, both receivable balance and warranty provisions, and the max allocated is 6, I'll do 3 for receivables and 3 for warranty provisions. So the question is, what are the additional procedures, you know, that the auditors should perform to reach a conclusion on the balance? You know. So on the receivable side of things, the receivable side of things, on the receivable side of things, like I've always said, always think about those 7 audit procedures. The first thing you could do is a review. And what will you be reviewing? You can review the board minutes. You know, if they have some board minutes or any legal correspondence, you can review it to see that, to check if there's been any, legal action that has been taken to recover any of these amounts that has gone into debt. So you can use that as well. I hope that makes sense. Is it confusing? I'm taking my time, but I don't know if it's confusing.
No, sir.
Okay. So you can review the board minutes. That's one. Another thing you can also do is you can also check whether you can also check, that's also centered around review. You can also check communication with the people, insurance company, to find out the reasons why, they are not paying. The reasons why they are not paying. All these audit procedures together would help the auditor come back to a final balance. So that's also another audit procedure. So that's also centered around review. Another one too, yes.
Is it ethical to request the bank statement of insurance company to know their financial standings?
So they'll not. I don't even see why they will release it.
Yeah, I doubt they would. They won't.
They won't release it. Like
they won't. Yeah, I doubt. Yeah,
they won't release it. Like you just need to know how much I owe. But why do you need to look at my bank statements?
No, so that you get to know if probably they are capable of paying, but company has not made have not made follow-ups, to settle to request the money owed.
Yes. I know where you are coming from, but as to whether they'll release it, they won't. So the only thing that auditors do is they rely on correspondence, any correspondence or communication with the company to understand why they are not paying. So through that understanding or that conversation, it may come up that maybe they are trapped for cash, or something is going on, or they are going to pay later. But as to whether they'll release their bank statement, I don't think that might happen. Usually auditors won't go that route because they are not auditing. They are auditing the clients. They are not auditing the data or the receivable. Yeah, but that would have been if they would release the bank statement, especially, and for the data too as well. Maybe the data too is managing their cash. So they'll not want to show you their finances, So it's more of a, it might be more of a commercial thing rather than even an audit thing. So overall, they might not release it. To be fair, they might not release it. So yeah. So that's the second one. The third one would be, I'm trying to think. Another audit procedure, you also need to find out or have a discussion with management whether, based on analysis of the debt situation or the receivable situation, whether a provision is required, or a write down is required, a write off is required. Then if you move on to the warranty side of things, sorry, I have to rush a little because it seems we have only like 10 minutes. If you move on to the warranty side of things, again, you can use review here, right? A review, you can review here. So you can review prior year's provision, you know, and assess the amount that were actually claimed and see whether management's estimate is actually reasonable, you know. You can do review or analytical procedures. So analytical procedures is basically do an analysis. So you go and check previous year's provisions and look at, how much was actually claimed. Then you use that to assess or analyze whether management's forecasts make sense. You can also review board minutes, right? So in board meetings, they actually have conversations around whether the level of provision has to change, you know, depending on the level of claims by customers. So that's also, you can also review board minutes. So you see that as we are going through this, you see that some of the answers, they repeat. So once you know the 7 core audit procedures, it can help you. You can also review what happened prior year and compare it to the claims that were actually made. You know. So these are several ways that you can use to, you know, come to a final balance. Question 4. And please, when it goes off, please join. I wouldn't want to waste your time too much. Time is already gone. But if you can go through 4, we go through 1 question and then we are done.
Question 4A. Among the factors hindering the development of third world countries is corruption. Corruption has been an obstacle for doing business in many countries. It occurs, excuse me, it occurs often in locally funded contracts, and several measures have been adopted to curb it, but it still persists. One of such measures is the creation of the Office of the Auditor General in many countries. Required, assess the role and constitutional status of the Auditor General of Ghana in ensuring public accountability as a means of fighting corruption.
Okay.
B. Okay.
So let's tackle A first. Okay. What are some of the roles? So you see it's highlighted. What are some of the roles and constitutional status? It's highlighted the 2. Role is the role and constitutional status. But let's talk about role. What is the role of the Auditor General?
I think the role of the Auditor General is to conduct
Please think of the Auditor General as an auditor of accounting. That's all. It's not anything difficult here.
Yeah. Okay, so I see it to be performing annual audits of government agencies.
Fantastic.
And presenting the reports to Parliament.
Fantastic. Okay, so since we don't have time, let me just breeze through. So the Auditor General does a lot of things. The Auditor General, he audits the public accounts of Ghana, as well as any public agencies, like our brother said. So just think of him as an auditor and think of Ghana as the company. The Auditor General also will have access to all the books, records, and documents that are relevant to those accounts. He has access to it. Another role is that he must submit his report to Parliament, you know, within 6 months of the year. So he must communicate with Parliament, you know, on what exactly is happening in the country in respect to, in relation to his audits. Another thing that how many marks? 10 marks. Okay, another thing that the Auditor General does is he must draw attention to any irregularities, any inconsistencies that are happening. The Auditor General must, bring it to notice. So all these things are part of the duties of an Auditor General. And any expenditure which is contrary to the law, he will disallow. The Auditor General will disallow. He has several, roles. But we don't have the time. We don't have the time. That's the only problem. He examines the report on the public accounts. He ensures that programs have been undertaken and undertaken in a way that promotes economy, efficiency, and effectiveness. That monies that were intended for a purpose have been used for that purpose. He's like a watchdog when it comes to the financial affairs of the country. Then it talks about the constitutional status, So the Auditor General, he's like the head of the Ghana Audit Service. That's the head of the Ghana Audit Service. And you should know that the Audit Service, it was established under the 1992 Constitution. It's constitutional. And the Auditor General is part of the Audit Service Board. It's part of the Audit Service Board. So that is where the Auditor General derives their legality. Derives their legality. So the Constitution has certain provisions when it comes to, who the Auditor General is and what the limits of his or her authority is. Let's move on to the next question, B. If no one has any question, let's move on to the next question, B. I don't know how the time flies, but anyway.
The Auditor General has a responsibility to ensure that government business is being performed in a manner which will bring development and benefits to the citizens. Various aspects of the conduct of government business will engage the attention of the Auditor General. For example, execution of contracts for the construction of a regional hospital. Required. Briefly discuss what performance audit entails. B. In carrying out the performance audit, evaluate the three main factors that the Auditor General will be concerned with in relation to the construction of the Greater Accra Regional Hospital.
Okay, so when we talk about performance audits, a performance audit is you are assessing the performance, of something, right? So a performance audit is basically it simply involves like reviewing an organization's activities in relation to how efficiently and how effectively it has used its resources, So that's why at the beginning, they said the Auditor General has a responsibility to ensure that government business is being performed in a manner which will bring development and benefits to the citizens. So here you are looking at how effective and efficient resources have been used, and we are reviewing that. So the whole purpose of a performance audit is to basically evaluate performance and